everywhere you wanna be like Visa, MasterCard, American Express. I bought the bank and I bought the jet.
I buy apartments, I send checks.
Yo, billionaire went undercover, help y'all discover who did it best.
Just bought 2 droppers, can't wait till they see the face and they see what I do next. When I walk through the door, I'm talking cash flow.
Hey guys, what's up?
You getting cash flow. When I walk through the door, I'm talking cash flow. And if you know like I know, you getting cash flow.
Yeah, and only then do I buy something stupid. How stupid can you go? You can go as stupid as your cash flow.
You know what heals on ills, deals. Look who went from meals to bills. It's eat what you kill when you're in the field. In the pipeline overflowing, I don't drip, I spill.
We don't seek balance, nah, we want extraordinary. If you really knew my dreams, it'd be more than scary.
You know where you're sitting in.
Talking about the bird and the strap. Say the word and she handle that.
Fully loaded, put it at the target, and you know we let it off every man. Got my money, who got my back? You can never get it if you never ask.
Big bags, legendary swag. Only one thing better than cash.
When I walk through the door, I'm talking cash flow. And if you know like I know, you getting cash flow. When I walk through the door, I'm talking cash flow. And if you know like I know, you getting cash flow.
When I walk through, no I won't do, no I won't do, no I'm talking to, not to, you know about to do, what? Walk in that door.
Before Shopify, were you wondering where are my sales at? But now you're selling with Shopify. You're easily selling online, in person, and beyond. Discover how millions of entrepreneurs use Shopify to ignite their selling. Sign up for a $1 per month trial period at shopify.com.
Jerry, you want to go ahead? Wait, hang on one second. You can go ahead and share your screen. All right.
Can you see my screen now?
Yeah,
Okay,
I
cool.
can. Yes. Hi, guys. Welcome to this warm summer Wednesday. Welcome to our Multifamily Freedom Chasers Financing Zoom call. My name is Shelly Miles. I am a commercial mortgage broker and a co-founder of our brokerage company, Adventure Commercial Capital, together with Mr. Jerry Miles over there, who you will hear from in just a minute. But I want to tell you what our company does. So Adventure Commercial Capital, our company, it does connect real estate investors like yourself to lenders. With that, I'm going to hand it over to you, Jerry.
All righty. Welcome, everybody. It's Wednesday in the beginning of August, and it's kind of a low numbers day, I guess. People are out and about and doing things in the summer here, but we're here working and ready to get some stuff done. So I'm glad everybody's here. We'll go over today's agenda. We try to keep these calls. We do these every other Wednesday. We try to keep them, to about an hour. Sometimes we go over a little bit, but we try to keep them at an hour. We'll talk about the community here, the Freedom Chasers community. We'll introduce ourselves and tell you a little bit about us, and we'll give you a couple of you a chance to tell us who you are if you'd like to. We'll go through the current debt market. And then our main topic tonight is how to prepare for a commercial loan. We'll be talking about requirements and those types of things as well. And then at the end, we'll do a Q&A. So the Freedom Chasers community started by the three gentlemen all the way on the left, Trevor, Victor, and Marcel. There was a fourth, Dr. Charles Bingham was also one of the founders. But they all met each other at a real estate meetup. They're all real estate investors and professionals in their own fields. Marcel and Trevor are both engineers. Victor's a pharmacist. Dr. Charles is is a family physician, and they all were looking for freedom away from their 9-to-5 jobs. And that's how they, they started this community about 2 years ago. We joined up about a year and a half ago, to take care of the debt education and money education part of real estate investing. We do 2 calls a week. We do one every other week, but along with these other leaders here in our group, Trevor does a call every other Monday at 8 p.m. Eastern. He usually has a celebrity guest on of some sorts, or a big wig in the real estate space will be on with him. Alternating Mondays from him, we have BB and Iffy. They both now, I believe, have 3 or 4 deals, 100+ units each, that they're actively managing and part ownership in. And they talk about asset management. They talk about partnerships and just all the ins and outs of putting deals together. You have my wife and I. We go over the debt market. We have different topics that we'll go over, different loan products we'll talk about, and different options on how to finance real estate. And we alternate Wednesdays with Kevin and Ed, that you see all the way on the right of the screen. And they are both commercial brokers. They buy and sell real estate all the time. And they are both actively investing in real estate. They just closed, I believe it was 120 units in Destin, Florida recently. So they're active, and I believe they just got a PSA on another property in the Pensacola area. So you're in the right place if you want to be around real estate investors. We're all full-time in the game and working in the real estate space. So here is different ways.
Yeah, and I just want to add,
Yeah.
I just added the link in the chat. If this is your first time here, give me a 1 in the chat so I know, so I can introduce you and say hi. We got Brian. Hi, Brian. Hi, Dorothy. Thank you guys for joining.
Thanks for having me.
You're welcome. I would like if you guys would come up and speak in a minute and introduce yourself. That's how we get to know each other on here. It's a very interactive Zoom. I shared the link to our Facebook page on the chat if you guys want to grab that and join it if you are not a part of that already. Jerry, go ahead.
Okay. Yeah, I want to encourage everybody to join all these different, groups that you can. In the WhatsApp chat, there are some big guys and gals in the WhatsApp group that are actively looking for deals. If I said some of the names, you would know them. But they are in the WhatsApp. So you download the WhatsApp and be a part of that group. And when you post messages, there's some big players in the game that are going to see your messages and things when you share them. So the content and things that you'll get on these calls with the Freedom Chasers, my wife and I, we join different mentorships and things off and on, because it's a way for us to meet real estate investors. But we paid as much as $40,000 a year for different mentorships and things, and the information, the connections, and all that you'll get through the Freedom Chasers group is equal to or greater than what we got when we paid $40,000 for a year of mentorship from another group. So, we're proud of that we offer all this for free. There's no charge. This is an interactive community. I think on the Facebook, it's over 2,000 people now that we have that are part of the Facebook group. So, join up in a group, be a part, and make connections. So who are the Miles? That's me and my wife and our 2 boys. We are the co-founders of Adventure Commercial Capital. We founded Adventure Commercial Capital about 4 years ago. We have run a commercial roofing company for the last 20 years. We still have that company. About 10 years ago, we started investing in real estate with single families and some duplexes and things like that. Um, you know, what we ran into when we started looking, we bought a house with cash, we fixed it up, rented it, tried to do the BRRRR method. We were having trouble getting it refinanced. When we was going and calling brokers to help us with the refinances, we found some that would do the deal, but we were not happy with the way we were being treated by the brokers. A lot of dishonesty going on, a lot of overcharging, and we felt taken advantage of, this and that. Through that process and through a lot of research, we found a group that actually trained us to be lending brokers. So we joined the National Association of Commercial Lending Brokers about 4 years ago, and now we're 4 years in the business now, helping real estate investors, buy real estate and to grow their net worths. And it's the old adage of, that I think Zig Ziglar started with: if you help enough people get what they want, you'll get what you want. And so, we're looking to grow our business by being a service to the real estate investing community. So that's why we're here. So if you'd like to introduce yourselves, I will tell you that we have people locally in our church that met people on this call. They come on and they've met people on this call and done business with them. We have, this does this to me every week. It signs
Yeah,
me.
go ahead and raise your digital hand if you want to introduce yourself. And this platform is not just an educational platform, it's a platform to introduce yourself and connect with each other and build a team if you can.
I see
There we
Brian.
go.
Go ahead, Brian.
Glad to have you, buddy.
Yeah, it's good to be here. Yeah, my name's Brian. I'm located out of Grand Rapids, Michigan. It's like Southwest Michigan.
Oh,
Yeah, I like the city. It's a nice city. It's good for investing. It's good for living too. There's a river that goes right through it. But yeah, I've been here since I went to school for electrical engineering. I graduated 5 years ago, and I've been living here ever since. Working for a couple different companies now here. But I'm a sales engineer for a wireless company. And then I recently this year purchased my first single family rental. And I'm looking to really upgrade my game and get into the commercial multifamily space. Yeah, some Class B assets, things like that.
Awesome. Good to have you here. We love Northern Michigan. We go to Traverse City area and Torch Lake every summer. So
Yeah,
we very familiar with the area. We actually just got back from Munising, which is up on
Yep.
Lake Superior.
That's right.
So
Yeah, there's great backpacking there. My dad was a dentist up there in Munising. But there's great stuff up there. A lot of good stuff.
Yeah, we love it up there.
I'm glad to have you. I do have a question. How did you find out about us?
YouTube. I was searching. I lost you on YouTube for a minute. I watched one video on how to talk to a broker, and I remember all the content you sent, you shared, but also the nice intro, the nice the beats, the production at the beginning, and I lost you guys for like a couple weeks, and then I refound you, family freedom chasers. So yeah.
Yeah, awesome.
Well, cool. Good to have you, Dwayne.
Glad to have you.
Yeah, thanks. Yeah, good to be here.
Dorothy,
Hi, can
how
you
are
hear
you
me?
doing?
I'm very well, thank you. How are you?
Doing awesome.
I had company for dinner. I threw them out so I could jump on.
Oh, okay.
But
Nice.
so I'm from Oakville, Ontario. Are you guys in Ontario? I don't think so. I think you're in the States, correct?
Yeah, we're in the Cincinnati area.
Okay, I'm in Oakville, Ontario, which is a beautiful, beautiful suburb of Toronto. I've been retired for 25 years, and I used to be an importer, but handing money out everywhere over 25-year period, money has quickly run out. So I've got X amount left, but I have to die before I'm 70, I guess. But so I want to create some new wealth, and real estate is where it's at. So I
Sure.
signed up. I'm under the mentorship program with Grant Cardone. I just got back from Miami in July. And Ken Dunn is a syndication here in Canada. And I'm realizing it might have been a mistake spending 35 grand on these courses because I don't know. I think networking is the biggest thing you can do. But in Grant's courses, one of the things he talks a lot about is how tough brokers are. So that's why I'm here, because you seem approachable. And according to Grant Cardone, real estate brokers are very unapproachable. You have to be a big player, otherwise they don't want to talk to you and all this stuff. I don't know. I haven't experienced that. I've bought homes in the past, but I haven't been an investor. So I'm pretty new to this.
Yeah.
I'm studying hard. I'm partnering up with a couple of other guys that I think we're going to do some massive things. I really do. I'm very driven and I just want to learn, and that's it.
Awesome. Great
Yeah.
to have you here. I'm 3 years in Grant's Real Estate Club. So
Oh,
I
I
was,
was reluctant. So do you like it?
yeah, I was in Miami in July as well. So
Okay. Oh, I wonder if I met you. You never know. Look at your card.
might
I looked
have.
at your card. You never
Was you
know.
in the VIP section?
I was.
Yeah,
I
we
was.
probably met over there on the left side of the room.
I was on the left for the first day. The second day, I was on the other side.
I think we met.
Yeah, very possible.
Yeah.
But anyways, I was the Canadian girl that Grant was saying something about. He was saying to another Canadian, "Why did you go to Winnipeg? Why didn't you just come here?" And I said, "Yeah, easier said than done." And I said, "Hey, Grant, you want to sponsor me? I'm out of Canada. I want out of here so badly." So,
Yeah.
anyways, but no, it was a great event. Although networking, I found it, I don't know, like you're in the room and you got these people beside you, and then if you have a woman sitting beside you, they tend to kind of cling on to you, and then you can't network the way you want to.
Yeah.
So I think I'm going to be a loner the next time.
Nice.
And the
Oh,
club
cool.
I haven't joined yet, but I have contemplated it. But like I said, I had just finished signing up. Between all the courses I've taken or signed up for, I've got 35,000 into that. So I think we'll see how that goes and then join the club once I'm more knowledgeable. Yeah.
Very cool. Well,
Yeah.
good to see you again, Dorothy. And
Thank you.
Nina.
And I
Yeah,
do,
glad to have you.
and let me ask you a question before you go,
Yeah.
because I know I'm going to be muted again, but as a Canadian, this is the part I'm a little confused. Like Grant talks about Fannie Mae and all that stuff. Um, but as a Canadian, is it hard to get a loan in America? Or do I have to get my loans in Canada and then go buy in the States?
No, we can fund Canadians in the US.
Okay, because I do want to be in the US. I mean, Toronto is hugely expensive, but like I'm looking in Cleveland right now. There's a lot of great deals there.
Yeah.
And anyway, so I'm coming to see you when I need money.
Yeah. Come on
Okay.
and give us a call.
What are the rates?
We'll talk about that here.
Okay. I'll mute myself again so you
Yep.
guys can carry on.
All right. Nina, how are you?
Yes. Hi there, Jerry. We've spoken a few times.
Yes, we have. Yep.
Yeah, I'm doing well today. Thank you. I'm in Seattle and we've got blue skies and sunshine. A nice, I think 72 or 3 here right now. It's gorgeous.
Awesome. Very nice.
Yeah. And I'm doing co-living out of North Carolina with Sam Wiegert, part of his mentorship.
Okay.
And so we're about to purchase a 3,000 square foot house and put 9 or 10 bedrooms in that. So I'm
Oh, wow.
excited to get going with that.
Very cool.
So yeah, that's next month. And then we're working on a Miami deal, 22 units, boutique hotel. So I'm very excited about that. We have a great operator and she's putting together a business plan.
Awesome.
And yeah, so I think that'll be around 6 million. So that's going to be really big. I'm just used to single family. So it's kind of wild to get into these bigger numbers.
Oh,
But
cool.
very exciting. I'm part of Sub 2 also. So huge community. I think we're almost 15,000 people strong in Sub 2. Mastermind with Pace Morby.
Yeah.
So all creative finance. So I know a lot about creative finance.
Awesome. So
Yeah.
on the boutique hotel, are you using SBA to fund that?
Not at the moment. We are looking at some private or investors,
Okay.
private money, and then also just found out about CFO by Design. I don't know if you know Miguel Hernandez or have heard of him.
No.
So just spoke with him today, and he has supposedly 300 lenders behind him also, and
Okay.
been doing it about 20 years. So the more I dig, there's a whole lot of help. And then we're
Yeah.
also, so I'm partners with Kim Mattis, and so we are part of REI Accelerator also.
Okay.
So that's a multifamily group too. So
Very cool.
got
Very
lots of education.
Yeah.
Got to get some stuff done.
Yeah. Well, it's good to see you, Nina.
Yeah, thank you too.
All right. So we will jump into the current debt market. Aaron, I'm going to move on, Aaron. And we'll give you 30 seconds. Give us a quick rundown.
30 seconds. Hi, guys. Hi. I think I met you guys recently. I think did somebody do something with Amy Silvis? I think.
I'm not familiar with
Anyways, I met you guys recently in the last 7 days. And I'm about a year into real estate. I'm a warrior with Rod Cleef. And I recently came in on a deal, a BTR in Melissa, Texas, 118 units. And then I just closed on a deal last week out of Cypress, Texas, 148 units. So yeah, I'm just here to network, be of value to someone, and learn more so I could be of service better.
Very cool. Thanks for being here.
Awesome. Glad to have you.
Thank you.
So current debt market, where the rates, there's all kinds of talk right now about, they're having an emergency meeting, they're going to lower the Fed rate, all these things. Hasn't happened yet. But right now the Fed rate is still at that 5.25, 5.5, highest federal funds rate in 22 years, still holding. We look at the treasuries. A lot of our long-term rates are based on the treasuries. So the 7-year, 10-year, 5-year, you can see those. Look up, just type in 10-year treasury on Google or 5-year treasury. It'll tell you what the treasury rate is. And the rates generally are going to be anywhere from 1.3, 1.4 to sometimes 3 over top of the treasury, depending on the deal. We've got a hotel right now in New York that we're working that's 3 points over the treasury. And then we've got other stuff that, is 1.5 over the treasury. So 1.5 over a 3.7, doing the math, you're what? It's 4.7, you're like low fives. So 5.2 is like a final rate that you could get right now, in a best case scenario. So, the treasury rates determine what we pay when we're looking at long-term debt, through CMBS, through a lot of private lenders. Your banks are going to use the treasuries. Freddie and Fannie use the treasuries. If we're looking at private debt, they're going to have different ways that they're going to borrow money. So they're going to be looking at, maybe the Bank of America rate, which I think is 8.5 right now, or 8.25. They're going to look at SOFR. They might be, 4 or 5 points over SOFR. Just different. If you kind of want to know, when you're talking to a banker or a lender, and they're talking about a product, you can always ask, hey, what's this rate based on? And they'll tell you, hey, this is, we're going to be 2 points over SOFR, or we're going to be, whatever it is. And then you can you're going to know when you get to the closing table what your rates are if you keep an eye on the treasury rates. So, could they go higher? Could they drop? That's anybody's guess. Right now, the 10-year treasury, last time we did this, was, I think, 4.2 2 weeks ago, and we're at 3.9. It was 3.7 on Monday when the stock market was falling so hard. You know, well, Dorothy, you were there at Grant Cardone's event at lunch one day. He was talking about, I think the rates could go. He said, I think the federal funds rate, could go down to 3 over the next year. He said, I think in a few years we could be back to 0% interest rates.
Yes.
And
Yeah.
then there's other ones that are saying, if you talk, listen to different people, you could hear some of them saying, oh, they're not going to be able to lower rates because it's going to spike inflation, and we're going to go into hyperinflation. We might jump to double digit rates. So it's anybody's guess. What I tell people when they ask me kind of advice, if you find a property that cash flows in the current market, and you get long-term debt, I'm talking 10 years, 7 years, on your fixed rate, you're going to be okay. If you buy properties in the hopes that you're going to be able to bump rents up and you're going to be able to get better rates in the future, it's probably not a safe bet because we don't know what's going to happen.
Right.
But do what you want with that. That's my thinking. Here is active rates right now through Freddie Mac small balance loans. Small balance on the Freddie side is anything from 1 million to 7.5 million. It says 2 million to 7.5 million. We can go down to $1 million loan amount on the Freddie Mac side. When you get above the 7.5 million mark, you go to what's called conventional rates. Those rates are going to be a 1/4 point better than what these rates are. So a loan amount above 7.5 million, you're going to be a little better than these rates. So now, just so everybody knows, when you're dealing with Freddie or Fannie, these rates are not locked in until closing. Sometimes we can get them locked in like 2 weeks before closing date. That's not always the case. Things that are going to affect these rates, you see a spread like, let's say 5.3 to 5.7. Things that affect the rates are rent amounts. So if you have below average or below market rents, you'll get better rates because you're providing affordable housing. Freddie and Fannie are mission-driven organizations that are here to provide affordable housing. So if you're providing lower than market rental rates when you buy the property, you're going to qualify for a little better rate in term. High crime areas. So if you're in an area that maybe has a little bit higher crime, that's going to affect your rates in a negative way. If you're in an area that has limited employment options, like a smaller town or something, that's going to affect your rate in a negative way. So nicer markets, lower rents, nicer properties are going to get better rates. So that's Freddie Mac. Here's the Fannie Mae side. General terms, Fannie Mae, likes the bigger populations. If you're looking at stuff that's smaller population, things like that, secondary markets and things, in general, we're going to go Freddie. A lot of little nuances between the two, but all in all, they're really close to the same. And these were updated yesterday, August 6th. So, we have been in a stagnant market over the past 1.5 to 2 years since the rates have kicked up. I feel and see kind of that it's starting to break free. There's a lot more deals coming to the market. If you kind of want to see what is happening in the market as far as the pain in the market, you can go to YouTube and check out our video we did 2 weeks ago. I go into detail about why there is pain in the market and all the details about what the interest rate does to cash flow and all those things. So if you want to see that, you can go back to 2 weeks ago. on the YouTube page and see our video there. But there's no doubt at this point, that a major correction is underway. The media and everybody else is still saying we're not in a recession. People that have been watching for, and the economists that are not part of the media machine, they'll tell you that we are in a recession. The job numbers, when they bring the job numbers out, and they report the job numbers every month, they report numbers, and then a week later they correct the numbers after the news story's over. Oh, jobs are strong, the market's going good. And then when everybody's quit talking about it, they'll come out with their correction to the job numbers, and they're always off, the opposite way of what is going on. So, $2.7 trillion of debt maturing by 2027, half a trillion 2024, half trillion 2025. These numbers are actually higher. If there was a deal that in the last, think over the last 2 years, there's probably been $1 trillion in debt that has matured. These deals have not had, they've not corrected their situation. A lot of them are on extensions. So they'll go into an extension for a year, and they'll pay a big fee to the lender to give themselves an extension. So when we're looking at a $500 billion maturing in 2024, some of these that have been on extension for a year and then they renew it another year, just waiting on rates to come down so they can afford to sell it or they can afford to refinance. These deals also are going to be maturing to where they're not able to extend anymore, and they're going to be forced to sell. And they're going to sell at a loss, most of them. So there was a guy just last year in Grant's Real Estate Club, a really big guy. I won't say his name. Some of you might know him, who he is. He's got almost $1 billion in real estate in the state of Texas. But he was foreclosed on a $57 million loan last year, on a multifamily in Houston. So it's hitting the big operators, it's hitting the little guys, it's hitting everybody. There's just a lot of these loans, if they're through Freddie and Fannie, CMBS, they have things in the paperwork that states you have to maintain this DSCR, or you have to maintain that occupancy, or this cash flow, those types of things. And if you don't match that, you don't meet those requirements, the lender can take the properties back. So there's going to be some of that. There's going to be a lot of different things, interesting things happen over the next year or two, unless they drop rates. I mean, if they drop rates, a point or 2 points, a lot of these problems can be fixed. Minus that happening, there's a lot of people that are going to be hurting. So, like I said, once again, you can jump on the call that we did 2 weeks ago, and you can kind of see, I broke it down on, what this is actually doing to people's deals, and all the details of it. So on to how to prepare for a commercial loan. What is required to qualify for a commercial loan? First thing, net worth. Your net worth with most lenders is going to require that you have a net worth equal to or greater than the loan amount. So if you're wanting to borrow $3 million on an apartment building, you got to show a net worth of $3 million plus. That can be combined among partners. So if you have two partners that each combined have $3 million net worth, or 5 partners, whatever it is, you could put those together and everybody could sign on the debt together. But that is a requirement that most lenders are going to have. Anybody signing on the debt, a lot of the gurus and things, they'll advertise, hey, I'm going to show you how to buy real estate without any money, without any credit, without anything, and all this. Well, if you ever want to be the person that's able to sign on the debt of a deal, your credit score needs to be 660 or better. And then also, it's important to have some experience when you're looking to buy an apartment deal. If you're buying something, more than 20 units or so, the bank is going to require that somebody on the team have experience managing 20 plus units. So when you're buying the small ones, 12 unit less or less, and you're in the local market, things like that, they're going to, not be as stringent on that. But if you're buying a bigger property, they're going to want to know that there's somebody on the deal that has done these before. So the next question is, what if I don't qualify? Which happens with a lot of people at the beginning. And then you bring on what's called a key principal or a sponsor. And there's people out there that will actually sign on deals with you and just take part ownership because they've built that net worth and all those things. Go ahead, Dorothy. You're muted.
Sorry about that.
Yeah.
I have a quick question. Everybody I talk to, including Grant, says they don't look at your net worth so much. They look at the building as a business. So is that not true?
No, they're going to look at both.
They do. And
Yeah.
that makes sense to me. It totally makes sense to me. But that's what everybody keeps pushing. So thank you for being so straight up. I'm really enjoying this call. Thank you.
Yeah.
Very
And
informative.
so where they talk about, Grant, one thing he always says is the deal is the most important thing. Right?
Mhm.
He says, if you find the deal, that's the most important thing. So the deal is key, the deal. So unless you have a deal, you can't talk about anything. You don't have nothing to talk about.
Right.
If you find the deal at that point will bring in the key principal or the sponsor. Because
Right.
if you find the right property, the right price, all the things, you have the deal, the key principal and the sponsor are going to be easy to find.
Okay.
So,
Okay.
and that's kind of where he comes from. I don't think he says that like trying to mislead. I think it's just, once you have the deal, you can find that sponsor, you can find that key principal. And I mean, I have a list of 20 or 30 of them. If somebody on here finds a deal and they get it under contract, or you have a deal that you want to get under contract, but maybe the broker is saying, hey, I need to see your resume. I want to see, because I know you're not going to be able to close if you haven't bought one of these before. The brokers know these things.
Right.
So you get a deal that you're really interested in, I can connect you with people that like to sponsor deals. So
Okay.
there's people on this call sometimes. I don't see anybody on here today, but on occasion that are here and they're looking for deals. They're looking to sponsor deals. So I connected somebody with a sponsor on 500 units in Atlanta just the other day. So
Wow.
that one closes, I'm going to be a 2% owner of the property because of the connection I made.
Because I'm sitting here feeling my bubble very burst right now because my net worth is down to about $1 million. And so yeah, that just made me feel very deflated. But like you said, if you have other people partnering up and they combined, you have the net worth. But I mean, you're not gonna buy much on like anything decent, really, probably you need at least a few $1 million. So
Yeah.
I'm
Yeah.
just hoping it's not a pipe dream, that's all, because I like putting 35 grand into courses and things, that maybe that was foolish. I should have kept that to go towards the deal.
Well, it's
Could have found you
all,
sooner. You're just a wealth of information.
it's all about the deal.
Yeah.
When you
Okay.
find the right deal, and right now, I mean, I'm talking to people every day. They've been shopping for a deal for a year and a half.
Wow.
And you know, the property that somebody paid 12 million for, and this is no exaggeration. This is deals that I see on a daily basis. The
Right.
deal that was bought 3 or 4 years ago for 12 million
Mhm.
in today's market is worth 7.5 to 8 million
Wow.
because of the interest rate change.
Wow.
So it's killed cash flows that much. So that person that, and this is a real deal that is active right now. The person's trying to refinance it right now. A hotel in Denver, they bought 12 million 3 years ago. They've rehabbed it. They've had it now rehabbed and cash flowing for, I guess, a year and a half.
Mhm.
And they've been trying to refinance. They owe 8 million. It was bought on a bridge loan. They have 4 million in equity from LP partners,
Mhm.
and the most we can refinance it for is 5 million. So the actual value of this property right now is 8 million. That's what they owe on it.
Wow.
And so their only option, what's going to happen eventually is they're on extension with the lender,
Mhm.
paying 12% because of the construction loan, paying 12% a year on this $8 million loan, pulling money out of their pocket to keep it floating because they borrowed money, or they invested. They had family members invest money into the deal. They don't want to lose that 4 million bucks in equity.
Yeah.
That's aunts and uncles and people they go to church with and all this. But that money, if they were forced by the bank to sell today, they're going to get 7 or 8 million for the property, and that 4 million in equity from partners is gone.
That's scary.
So
Wow.
that is the situation right now in the market, and that's why everybody's excited and saying, "Hey, we're going to find some deals," because when the rates go back down, that property is going to be worth 12 million bucks again or
Right.
more. And if you can pick it up for 7 right now, I mean, you've just won, 5 million in equity. So
America's not at, do you feel America's at risk of another housing crisis like in 2008?
not housing, but commercial real estate's hurting right now
Right.
because housing is all fixed rate debt. It's fixed for 30 years, most of it.
Right.
The only way the housing would go down is if unemployment goes through the roof, or inflation goes up so much to where people have to decide whether they eat or whether they pay the mortgage.
I think we're there in Canada.
Are you? Yeah.
Oh, yeah. I
And
mean,
in some instances they're that way here, but in general, it's got to get way worse for the housing market to really crash.
wow. So I'm just renting this house since my divorce because I just wanted to be free to leave. But it's this house, I pay 4,600 a month and it's nothing special. And if I was told by the real estate agent, if I were to leave here, I'd have to pay 8,000 a month for this house. And I'm like, huh? Like nobody can afford to live here anymore. It's crazy.
Yeah.
Really crazy, yeah.
Yep. It's
I have a
getting
condo in Florida and I own my condo, but my girlfriend, she started renting 2.5 years ago. They've already raised her rent 600.
yeah,
Like feeling that she has to move, and I think that's happening everywhere. It's a problem.
it
And
is.
yeah, and when you talk about offering lower rents to people, I mean, ultimately, I would love to be able to do that because there are people hurting like crazy, and I don't know how people are surviving. I don't know how little old age pensioners are surviving. I mean, it's just insane what's going on in this world today.
Oh yeah.
And talk about inflation. I mean, are we not already in hyperinflation? We sure as hell are here.
Yeah. And there's an argument for that for sure. But
Yeah.
all right, well, cool.
Thank you for
So
your input. I appreciate
yeah,
it.
for sure. How to prepare for a commercial loan. Things to have ready. A bio. Tell a little bit about your experience. I know there's a few of you on here that talked about that you've been part of mentorships and things. Put that in the bio. If you've bought and sold single families or small multis, put that. Anything that's a help to your experience. Talk about your professional experience, whatever it is. Um, put it in your bio. You're going to want to share this with your partners, with KPs and sponsors, those types of things. Things that you will need as you're moving along and you want to be a sponsor yourself. Personal financial statement. Start working on that and getting that together. If you Google SBA PFS, they have nice templates for personal financial statements. And something else that you're going to be asked for from brokers when you start looking at deals and talking to brokers is an SREO, and that stands for Schedule of Real Estate Owned. And so when you put it together, a schedule of real estate owned, if it's single families, multis, whatever, put it all on there. Be detailed. They're going to want to know the listed, properties you own listed, addresses with the value, purchase price, the date it was purchased, income, taxes, insurance, all those types of things. So the things that you don't need to worry about that a lot of people worry about right off the bat, don't go out and create LLCs. Don't go out and start talking to lawyers about how to structure your money and all these things. Worry about that. You're going to be into a deal. You're going to be with a key principal or a sponsor that knows how to do these things. If you set up an LLC, chances are you're going to have to set up another LLC once the lender gets involved, because they're going to require the LLC to be done in a certain way. So these are all things that can be done as you're under contract on a deal. And if you set up an LLC, like I said, chances are you're going to have other people that want to be on the LLC. And the lender's going to say, hey, we want this type of LLC, all those types of things. So that is it with the preparing for a commercial loan. I'm going to open up for Q&A, and I'm going to keep going through slides because we're about 10 minutes from time to be done. So anybody has any questions, go ahead and raise your hand, and I'm going to keep rolling through slides here. Things we need for a quote. If you have a property you're looking at, you want to see what the debt's going to look like. T12, rent roll are must. I need those, the most updated ones you can get. And OM is helpful because a lot of times the rent rolls and T12s won't even have the address of the property on them. They'll just have the property name. I don't know if it's in Bentonville, Arkansas or San Diego, just from the rent roll. So a summary of what you plan to do with the property. I have a lot of people that will send me an OM without a T12 or rent roll. I really can't do much with an OM. I mean, they'll have financials on there, but they're usually inflated financials. So T12 rent roll is very helpful, and an OM. Right, and when you send an email to me, give me a little bit of a summary of what you plan to do with the property. What are you thinking you're going to offer? Those types of things. Things that we'll need before we go under contract with a lender is schedule of real estate owned, personal financial statement, and those will come from the sponsor. Needed for a quote on a DSCR loan. So this is a single family, 1 to 4 units. Address, if it's a purchase price. If it's a refi, purchase price, date purchased, current value, monthly rent, taxes, insurance cost, and borrower's credit score. And what can you do today? I'm guessing most people want to be a key principal or a sponsor at some point and able to sign on their own debt. What can you do today to make sure that you are able to do that in the future? Make sure your credit is in order, for one. Start working on your PFS and SREO. Even if it's just buying something small to put on an SREO, or start listing out your your personal financial statement, your assets, your asset column, and your your outgoing, your incoming, and all those things. So get your bio together. You can start working on raising capital, talking to people that will give you money for a deal, or just work in your own business or whatever it is you do to get better at it, make more money. We also do a referral program. So if you are looking to make more money, we will pay referral fees to people that bring business to us. And I see we have 2 hands raised. Brian, go ahead.
Can you hear me?
I hear you, yes.
Hello?
Yeah.
Go ahead and put the slide on the WhatsApp QR code so people can have it while Brian asks his question.
Okay. Yep.
The QR code, guys, for the WhatsApp chat. Go ahead and scan it while Brian asks his question.
What's up, Brian? Oh, you're muted.
Thank you. Thank you. Yeah, so you said work on raising capital. I feel like, as I get more into the multifamily space, that may be one of my weaknesses, but a lot of the books I've been reading say, oh, you may want to start thinking about starting your LLC, your own personal investor LLC. But you're saying, no, don't worry about that yet. But maybe in my mind, and I don't have the experience yet, but what I'm thinking is I want the LLC to give me some type of credibility or branding at least.
Yeah.
And you're saying maybe that's not necessary?
Well, these LLC you start for your personal name and your personal name to run your business out of is not going to be the one that holds the property generally. So
Gotcha.
if you have 5 different properties, each one is going to be in its own LLC. And then you might have your LLC, instead of it being Brian, it might be whatever your LLC name is or your business name is. And that might be the holder of the other LLCs. So yeah, you can get those. But as far as like an LLC to hold the properties, a lot of the LLCs you'll see for a property, it's going to be like 11931 Windmill Lane, and that'll be the LLC, and it'll be Windmill Lane LLC because, that's what it was. That was the property address. You made an LLC just to hold the property. So
Yeah. Okay. That makes sense.
yeah. All right.
Thank you.
Does that help?
Oh yeah. Yeah, definitely.
Good.
Thank you.
All right.
Go ahead and switch your to the next slide.
Okay.
One down
So-
from that one. That one.
Oh, the next one down. Okay. Contact info.
Contact info while I read this next question from Sam.
Okay.
What about sending personal identification information such as social security number to brokers? Security concerns.
You have brokers asking for social security number. Is that what we're saying?
I'm not, I don't know. I mean, usually the lender would ask for that.
Yeah,
So,
and I mean, a lender's really not going to ask for that right off the bat. They're going to ask if they're thinking that they don't want to waste time on somebody that's not experienced. They're going to ask you a question like, "Hey, send me your bio. Let me know what kind of deals you've done." When you get that question, the broker's trying to feel you out to see if they're wasting their time or not. Because somebody that hasn't closed a deal, unless they have somebody with them that has closed a deal before, usually is not going to get a deal done. Now, unless that person has a lot of cash, let's say your business takes off and you've got 5 million in cash and you want to buy an apartment building, and you tell the broker, "Hey, sorry, I don't have any under my belt, but take a picture of your bank account and say, hey, I've got 5 million in cash," and then they're going to take you seriously. So when they start asking you questions about, send me your bio, send me your SREO, those types of questions, that means that they don't think that you're a real person or a real buyer, or that you're a tire kicker. Now, it's good if you find a deal and then they start asking you for that, and then you say, hey, I've got a deal. Is somebody able to help me on the deal? You put it in the WhatsApp chat and say, hey, Brian, Ed, they're both, do calls here, or Jerry, Shelly, or, Iffy and BB, we're looking, I've got a deal here. Do you guys want to look at it? Are you interested in it? And if it's in their buy box or whatever, they're going to look at it, and they'll probably partner on it with you. And that then, you can have BB and Iffy that say, oh, well, they're asking for a bio. Okay. And they're going to send you a bio with their 3 deals that they own. And then the broker is going to say, oh, okay, we got somebody that has done it before. We can talk to you. Okay. So that the saying that we've all heard of, your net worth, or your network is your net worth. When you're in these groups, we've paid what, 70,000 over the last 3 years to be in the real estate club, Grants Real Estate Club, because of the network in there. There's, I mean, a lot of people in that group. I mean, a lot of the people, somebody said Rod Khalif. I've been to Grant's real estate events, the real estate summits that he does, and Rod Khalif has been at a few of those. Michael Blank has been at those. Brad Sumrock, he's at those. A lot of these guys that have these mentorships all are in the real estate club with Grant. So when you're in the real estate club, that's the people you're rubbing shoulders with. And when you need somebody to co-sponsor a deal with you, you've got the network there now. So that, these groups here, Grant's group, all these different groups, the most important thing that you'll ever get out of these groups is the network. So
they said tax returns brokers ask for, and they have a Gmail address asking me to send on a Gmail account. So that's,
yeah.
I don't know why they would ask.
Is that a broker or is that a lender? I mean, really, even a lender's not going to ask for your tax returns like that. So I don't know. That sounds weird. This is our contact info on the screen here. My phone number, mine and Shelly's emails. If you click the QR code or scan the QR code, that will give you my hi hello card, and you can send me your contact info. We can exchange that way.
Also, any complications with operating company versus holding company, showing income, etc.
I'm gonna look at the chat. Give me a second to find it here. I'm not able to see the chat because I have my slides up. Oh, there it is. Okay. Oh yeah. I've never heard of a broker asking about tax returns. But yeah, I don't know. That's weird.
I mean, I've asked for tax returns on an SBA loan.
Yeah, when we're doing different types of loans, we need them. But if you're just looking and talking about the deal or things like that,
Mhm.
That's one that's new to me. So, all right. So this week's verse, we do a verse every week. Deuteronomy 8:17-18. You may say to yourself, my power and strength of my hands have produced this wealth for me. But remember the Lord your God, for it is he who gives you the ability to produce wealth and so confirms his covenant.
So on Monday, we are having a call. We're skipping that Monday. That's an off Monday. The next call will be on Wednesday with Kevin and Ed. Join them. They're awesome. Learn how to engage with brokers, deal source, and underwrite quickly, which is napkin underwriting, if you've ever heard that. They do a very good job at that. So join them. Go to the next slide. And while I'm speaking here, go ahead and put your information in the chat. I already see some other people has been doing it. Put your information in the chat. Tell them what you do, what your strong area is, and connect with each other and build a team, guys. So here's another free Zoom call you can join. It's our good friends, Elise and Mary. We're their special guests tomorrow. So join them tomorrow at 7 p.m. Eastern Standard Time, which is 4 p.m. Pacific Standard Time. We're going to be their guest, and we will actually be talking about, I don't remember.
We're going to be talking about the current market and the pain in the market. A lot of people hear, oh, there's pain in the market, there's pain in the market, but I've learned that a lot of people don't understand what that means or don't understand why the higher interest rates cause the pain. And we're going to deep dive into that tomorrow on this call. So it'll be a good time.
I just shared a link for that in the chat. Go ahead and grab that and register for that call and join us there, guys. That's another free Zoom with high-level people in there that you guys can connect with as well. So go
And
ahead
Elise
do
lives
that.
locally here with us. Yeah, what?
I said we'll be the guests. So
Yeah. And Elise lives here locally with us, or here in the Cincinnati area. Her and her husband have been investing for a few decades now. They've run big apartment buildings and now have a lot of self-storage and different things like that. So some more good people to know. Our next Zoom topic, we'll be talking about agency loans, Freddie and Fannie. Community like no other, join these calls. And thanks everybody for joining.
I appreciate everybody being here tonight. I will leave you guys with some music. Click that link to register for the Zoom call tomorrow at 7 p.m. Eastern Standard Time. And you guys have a great rest of the night, rest of the week, and a great weekend. I will share my screen now. Bye, guys. Thank you.
Was you putting music on?
When I walk through the door, I'm talking cash flow.
Let's see everybody
And if
later.
you know, like I
Good to see everybody.
know, you getting
Can't hear my music.
Coming in and out.
No, but a proper now, edited. This comes